social distancing. We also consider reviewing histories from previous downturn and crises, and as well as the current sentiments of what the position might be in terms of potential buyers in the UK market, and what response we may see with some of the government policies in place to support a positive demand side stimulus. So I know a lot of people may be asking what has happened since COVID. So let's have a quick review of the last few months. As the UK went into a lockdown sometime in March, there was an obvious immediate slowdown in the market. But once estate work started to open up again, we see a quick recovery in terms of housing demand, particularly in the tenant demand sector, which I think is a good assurance for a lot of landlords and property investors. Now that UK is opening up a bit more, we foresee that recovery would be the fastest in London, and how then we measure the impact of COVID-19 on supply of new homes. So before we talk about the forecast, I think it's good to look at the past. History has always been very useful for us to make sense of prices and where we are when we are in the midst of crisis. And this graph is actually something that our research team use a lot. And you can see here is a relationship between house price change as well as annual housing transaction over the past 30 years. So, our research team use this a lot to make sense of what's happening and what's going on. So you can see over on this graph, there is 6 major crises that occurred over the past 30 years. And you can see the most notable one would be the GFC and the UK recession in the early 90s, and the GFC sometime 12 and 13 years ago. So in these instances, there has been some significant distress in a drop of transaction prices, and it's due to a significant distress and business distress that led many to many forced sales during that period. So now that I think this time around it wouldn't be the case, because there are a lot of job and business protection scheme that helps protect the market and hopefully cushion the house price fall in the UK. And we will continue to observe buyer sentiments as I will be talking about later on in my presentation. So the consensus is that with what has happened with COVID, there might be some adjustment in terms of house prices in 2020, but it will recover later. And I'll cover this later in my next presentation. Next slide, I mean. So it is also important to consider the effect of house building, which is a very important story as well. We know that in the past 30 years, during the during financial crisis, there have been some housing, building that was affected as well, house building that was affected as well, notably again during the UK recession as well as the GFC, where you see a massive, a significant drop in building activity. And this chart over here looks at new housing starts, or what you call as new developments. And we saw in the GFC in particular, there was a drop of about 100,000 homes over a year, as UK see a lack of capacity to build, in particular with the small to medium-sized developer that that went out of business. So this time around, we don't expect that to happen, as many of the home builders are in a much better position to weather the storm, so to speak. However, of course, with the fact that there is social distancing measures with regards to the response to COVID, will probably lead to a slow down in new homes completion, and therefore a lower number of properties that will complete in the next 12 to 18 months. Okay, so yeah, so this brings me, after looking at the past trends, this brings me to my current slide, which is our headline forecast numbers for the year, for the next 5 years. As I've shared earlier, and as you can see on the chart, we do expect transaction numbers to fall across the UK for the remainder of 2020, and the ramping and then ramping up slowly, but I think surely, from 2021 onwards. So what I think what essentially it means is that if there would be a further downward pressure on the supply side, which hopefully means more of an opportunity for you to realize this potential, and especially if new opportunity comes your way or buyer's way. Okay, so again, we do expect prices to fall in the UK till the end of 2020, and we are already halfway through the year. But most important thing to consider is that we expect the recovery to be the quickest and in prime central London as well as in Greater London. Given that London is looking good value when you compare it to other prime markets on a relative basis, prime markets around the world on a relative basis, so yeah, there's a lot of pent-up demand, especially in prime and Greater London, and you would see that these locations, when you compare it to the rest of the UK, will start to perform better coming out of a crisis. So for us, this forecast, this momentary moment in time fall in prices is actually an opportunity, or it could be an encouragement to a lot of buyers out there who are opportunistic in nature, to come in where prices are subdued, and as we can expect a more positive trajectory from 2021 onwards, and potentially even more in the future. So I think it's also important to look at data from the Land Registry, and right before COVID. This is actually the latest, most available data that we can get online, March 2020, whereby it gives an indication of where the market was heading post-Brexit. In fact, just from our experience, before all this lockdown that happened around the world, us in Asia and also in London, we were seeing, a very good, uptake in terms of inquiries and transactions. And you can see out of all the regions in the UK, London was performing the best, and at 5% appreciation per annum. And this was indicating that buyers were looking at London as the most desirable location in the UK. So in other words, really, if you putting aside what's the situation with COVID-19, this graph was a good indicator of where the greater UK and London market was heading. So let's look at all of the other, I would say, positive reasons to invest in the UK housing. First of all, we know that the sterling is undervalued next to the US dollar. If we go back to pre-Brexit time, in June 2016, sterling was trading at about $1.48. And pretty much ever since, it has moved around between $1.23 to $1.30 mark, at the start of the year, when there was a certainty with where the UK was heading after Brexit, we actually saw the sterling starting to appreciate at the turn of the year, and especially when UK was looking better in terms of a more certain path. But of course, COVID-19 happened, and it has formed some kind of a step back, and sterling went down a little bit more, and it's currently now trading at about $1.25, $1.26. But the consensus is, by many forecasters, is that the sterling is obviously currently undervalued, but will be expected to appreciate to about $1.40 in the next 3 years or so. So you know, we are talking about a 15% currency appreciation, currency arbitrage, which is quite good for those who's wondering when is when is the best time to buy. And this is adding to my forecast earlier, where we could see a positive appreciation in price. Looking at the currency alone, you could potentially look at double gains in terms of price and currency appreciation.